All right, this is the weekly 30-year U.S. Treasury bond futures June 2019 contract weekly letter for the week of Monday, June 10. And I'm not going to start with this particular chart. I'm going to start with the newsletter itself. Um, so right now we settled at 145. I'm sorry, 154.17 last week. That was three ticks above a formation that was at 154.13. That is now at 154.25. Let me show that to you right now. There it is. All right. So that's the 154.25 formation. We settled just above it, not enough to consider it a clear secondary buy signal into later June. And in fact, if we open Monday below 154.25, you can make a case that the market remains susceptible to bearish retracement over the next several weeks, next week or two, down to actually maybe this week 152.10. Let's go back to the newsletter itself. 154.25, holding below it, closing below it on a daily basis, does allow 152.10. Both of these levels able to contain weekly activity. So 152.10 is your support. If we close the week below 152.10, that would indicate a good June high. You've got little stair steps all the way down, but ultimately closing back below 152.10, you should allow 3 to 5 weeks bearish retracement down into the significant zone of longer term support between 145.15 and 147.15. This is an area that can contain selling really through the balance of the year. And in fact, above which there is certainly, obviously, an upward pattern here. And so if we close below 152.10, expect this 145.15 to 147.15 region within 3 to 5 weeks where we can bottom out through the balance of the year. And in fact, above which the next several months should yield bullish continuation into the 159 handle. And let me get to that right now. So here's that 157.20. Let me go back. Sorry to jump around so much. If we, let's say on Monday we open above 154.25, that then becomes support for the week. And we could, by Friday's close, test this 157.26 channel top that spans back to the October lows. And that's also seen right here. And what I like about this is 157.26 is rising weekly and merging with this much more significant long-term resistance area currently in the 160 handle. It's a combination channel top descending two-thirds speed line that is trend defining. And so this area all comes together in early to mid-July, the first half of July. It'll be in the 159 handle at that point, and it is an area that can absorb annual buying pressures and quite possibly through 2020. Once we test this area, the market is then prone to bearish retracement, possibly back to the bottom of the channel formation itself. Although that would be very, you can't get too far ahead of yourself here. There would need to be some support levels in the way down to indicate that. The first would be, of course, closing below this structure here at 145.15. But let's go back and let me just sort of summarize this. We are bullish this week above 154.25, 157.26 in reach then, possibly by Friday's close, could be by the end of next week. This is an area that by mid to early July merges with a much more significant resistance area currently in the 160 handle, all coming together in the 159 handle at that point in time where the market can top out on an annual basis. Now, downside, if we happen to hold open Monday and hold below 154.25 because we did close at 154.17, then the market is susceptible this week to slipping back to this simple trend line at 152.10, which can absorb selling through next week. And once we test it, the market can actually rotate higher again into July trade. But if we close below 152.10 on Friday, then that would indicate, as I mentioned, a good June high, 3 to 5 weeks bearish continuation down into this 145.15 to 147.15 region where we can bottom out through the balance of the year, and holding above this lower area the next several months should yield this upper resistance region. And that's really all that needs to be said for the week of Monday, June 10, 30-year U.S. Treasury bond September contract.